The Hong Kong Securities and Futures Commission (SFC) recently outlined its proposed crypto licensing regime. It sets out a range of prerequisites that must be met by cryptocurrency exchanges and service providers, including safe custody, know your customer, conflicts of interest, cybersecurity, accounting and auditing, risk management and anti-money laundering/counter-financing of terrorism. Proposed policies prioritize investor protection. The Hong Kong Securities and Futures Commission (SFC) recently outlined a crypto licensing regime that will require all centralized cryptocurrency exchanges and service providers to obtain a license before they can operate in the city. It will also impose anti-money laundering and counter-terrorist financing obligations on virtual asset service providers (VASPs) as part of the government's efforts to build a safe and secure crypto ecosystem in Hong Kong. The SFC will now begin a consultation process defining the new crypto licensing regime that is slated to go into effect in June 2023. Whether to permit regulated exchanges to retail service investors in the nation and what steps should be taken to offer a variety of strong investor protection measures will be crucial issues for public feedback during this period. One key issue pertaining to the new crypto licensing regime is whether to regulate stablecoins, which represent underlying economic rights such as a share of revenue or profits. The SFC will determine if such tokens qualify as securities under the existing law. Moreover, the SFC will consider whether it is appropriate to regulate overseas VA non-derivative exchange-traded funds and complex products. However, the SFC suggests that such products should only be offered to professional investors in order to protect the interests of the consumers. For crypto businesses operating in the country, this will mean that they must update their systems and controls to comply with these new requirements. They will also have to make arrangements to discontinue operations in Hong Kong if they don't intend to apply for a license. In a press release, the SFC said that all centralized cryptocurrency exchanges and service providers must seek a license from the regulator before they can operate in the city. In addition, they must meet various prerequisites including the safe custody of assets, know your customer, KYC, conflict of interest management, cybersecurity, accounting and auditing, risk management, anti-money laundering/counter-financing of terrorism, and prevention of market misconduct. The SFC will also impose anti-money laundering and counter-terrorist financing obligations on VASPs, reflecting guidance from the Financial Action Task Force (FATF). Failing to follow these regulations may result in fines of $5 million or up to 7 years imprisonment. Licenses required for cryptocurrency exchanges and service providers. In a bid to promote Hong Kong as an Asian crypto hub, the Securities and Futures Commission (SFC) recently announced that retail investors would be allowed to trade larger cryptocurrencies on licensed crypto exchanges. This announcement is a major step forward for the city's plans to become a crypto center and marks an important milestone in the crypto industry. The SFC also outlined a crypto licensing regime that will be put in place from June 2023. This licensing regime requires cryptocurrency exchanges and service providers to apply for a license from the SFC. This will help to ensure that companies meet higher standards on safe custody of assets, know your customer, KYC, practices, conflicts of interest, cybersecurity, accounting and auditing, risk management, anti-money laundering/counter-financing of terrorism and prevention of market misconduct. However, the SFC also warned that some exchanges and service providers may not be able to meet these requirements. Therefore, it advised businesses to review and revise their systems and controls to ensure that they meet the upcoming regulatory guidelines. For example, if an exchange is not in compliance with the law, it will not be able to remain in business and it could shut down. Additionally, there are penalties for violating the SFC's regulations. This includes criminal penalties for the following offenses: fraudulently or recklessly inducing others to invest in virtual assets, failing to comply with AML/CTF laws, and theft, fraud or destruction of accounts, records, or documents. The SFC will also be given broad powers to supervise AML/CTF and regulatory compliance by licensed VASPs. According to the SFC, the crypto market has become a global phenomenon and it is essential to maintain legal compliance in all jurisdictions where your exchange is domiciled or where its members or traders are located. This is especially true in light of the rapid changes in cryptocurrencies law and regulation worldwide. In addition to the SFC's proposed licensing rules, the Hong Kong government has been actively promoting stablecoins as a way of fostering financial innovation and ensuring investor protection. In particular, the Hong Kong Monetary Authority (HKMA) is considering regulating stablecoins purportedly backed by one or more fiat currencies, as these pose more imminent monetary and financial stability risks than other types of stablecoins. Stablecoins will be regulated. The Hong Kong Monetary Authority (HKMA) has outlined its plans for a crypto licensing regime. It will begin with regulating stablecoins backed by fiat currencies, as they pose greater monetary and financial stability risks than other types of crypto assets. During its consultation process, the HKMA received feedback from 58 industry participants, including major cryptocurrency firms Binance, Circle, Ripple Labs, Matrixport, Animoca Brands, and Symphony Digital. These responses helped the HKMA determine its priorities and develop its conclusions, published on January 31, 2023. In its conclusions, the HKMA announced that it will first regulate stablecoins pegged to one or more fiat currencies, including the Hong Kong dollar, as these are more likely to be used for payments and linked to the traditional financial system. The HKMA intends to supervise the governance, issuance, and stabilization of these crypto assets. In addition, issuers will be required to maintain reserves that match the amount of the crypto in circulation. Stablecoins that derive their value from arbitrage or algorithms will not be accepted by the HKMA. The agency intends to introduce a comprehensive regulatory framework for stablecoins that includes requirements in areas such as ownership, governance and management, financial resources requirements, risk management, anti-money laundering and counter-terrorist financing, user protection, and regular audits and disclosure. The HKMA has set a timeline for introducing the regulatory regime between 2023 and 2024. Its approach will be based on the latest market developments and international discussions, as well as expert opinions. To further enhance investor protection, the HKMA has stated that regulated entities should not deviate from their principal business as permitted under their relevant licenses, such as wallet operators who should not engage in lending activities. It also noted that a key principle of the proposed regulatory framework is full backing and redemption, which should ensure that any stablecoin holders are able to redeem their stablecoins into the referenced fiat currency at par value within a reasonable period. According to the HKMA, algorithmic stablecoins will not be allowed under its proposed regulatory regime because they pose significant risks. This is because they may depeg from the original currency if there is a disruption to its supply, leading to a collapse. Enforcement measures. The Hong Kong government has announced a number of enforcement measures that are aimed at ensuring investor protection as it looks to revive its role as a global crypto hub. These include a licensing regime for virtual asset service providers and a clampdown on misleading crypto advertisements. Under the VASP regime, all VA service providers must apply for a VASP license to operate in Hong Kong. Licensed VASPs will be subject to a wide range of regulatory requirements, including AML and CTF obligations. It will also be an offense for a person to conduct a VASP business in Hong Kong without a VASP license. In addition, it will be an offense for a person to actively market any VA service it provides outside Hong Kong to the Hong Kong public. Additionally, it will be an offense to employ any deceptive or fraudulent device, scheme or act in a transaction involving virtual assets. This offense is aimed at preventing market manipulation and insider dealing activities, which are a growing concern in the global cryptocurrency sector. The HKMA also issued guidance that regulated entities should not conduct activities that deviate from their principal business as permitted under their relevant license. For example, a wallet operator should not engage in lending activities. However, it is unclear how far these principal business restrictions will extend. Moreover, in its 2022 policy statement, the government indicated that it is open to reviewing property rights for tokenized assets and legality of smart contracts. It also said it will consider conducting a separate review on derivatives. This comes in the wake of the collapse of FTX, a major crypto exchange that was based in Hong Kong, and signals a further effort by the government to encourage retail crypto investors to return to the city. The new legislation is a significant step toward achieving this goal and will help the city to become more of a cryptocurrency center.